Isaac Green, President and CEO of Piedmont Investment Advisors, and Don Luskin, Chief Investment Officer at Trend Microlytics. Let me start with you, Isaac. I wonder whether or not you think, early on, the take was that Obama was going to be toxic somehow for equities. As we've seen him move closer and closer to the middle, whether through convenience or evolution of his ideology, will the markets warm to him, even though they don't appear to be doing so today?
Carl, the markets have bottomed out around the time of the election and have been more or less rallying since Obama was elected. I think the change in leadership and the idea that we've got new hands and a thoughtful leader for the next 4 years are giving the market strength to form a bottom here.
Don, you agree?
Well, when you say more or less rallying since Obama was elected, I'd say less rallying. The S&P's off about 18% since Election Day. That's definitely less rallying. It's not just Obama, but look, let's face it. We've got an anti-business Democratic Congress. We've got a Democratic president who's more centrist than that, but who isn't more centrist than that? We got a real battle going. We don't know whether this administration is going to be able to hold back the populist impulses of this Congress or not, and stocks are scared to death, and they should be.
Don, it's John Harwood. When I interviewed President-elect Obama a couple of weeks ago, he said he was going to pay attention to market psychology, but he wasn't going to follow the ticker day by day. He had to keep his eye on the long view. Let me reverse that, ask you from a market perspective, to what degree do you think the market is reacting and will react hour to hour based on developments in the administration, or is the market capable of taking the long view about what Obama's trying to do with this economy?
Well, there's really no contradiction between those two things. The market always takes the long view. However, the market extrapolates the long view from facts as they evolve minute by minute. So right now we have a new administration that's coming in and taking the TARP program and kind of re-engineering it, calling it bad bank, aggregator bank, basically back to the future, the discredited ideas of early October where we were talking about buying toxic assets. That turned out to be impractical, so we made direct capital investments, so now we're going back to buying toxic assets. At the same time, we're engaging in bank
Well, does the market think
saying that banks
TARP
aren't lending when in fact banks are lending. That was never the purpose of TARP anyway, to get them lending.
Don, does the market think that TARP as it evolved, does the market think that TARP as it evolved has been working well?
I believe so, because what we've got here is we've got a situation where the government now is a template for coming in and recapitalizing banks when they need it. One of the reasons the markets were down on Friday and are down again today is that template has been thrown up in the air by the new administration. We've got Sheila Bair all over the place talking about a whole new way to do it, which is the same as the old discredited way to do it. So once again, it's a world of uncertainty. That's the last thing we need.